Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Heldt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Hey, welcome back to the podcast. This week, my guest is Ryan Gibson, and he is the President and Chief Investment Officer of Spartan Investment Group, a veteran-owned real estate investment firm focused on value-driven growth and disciplined execution. Ryan leads investment strategies, capital allocation, and portfolio performance, helping investors build sustainable wealth through real assets. He is also the host of Passive Income Pilots, where he educates high-earning professionals on investing with clarity and purpose. Welcome, Ryan.
Thanks for having me, Gary. Appreciate it.
You got a lot going on here, don't you?
That was a lot of words for describing that we basically just buy and operate self-storage. It's as simple as that.
there you go. There you go. But it's not as simple as that. So
it's not.
Tell me about how you got started in this and why you wanted to go this investment route, and then we can talk about why self-storage is what you decided to hop into.
Yeah, I think today where we're at now is we own about 7 million square feet. We're the 29th largest owner of self-storage in America. So, and I think everybody has their story and how they got to that size, and over almost 200 employees now. The way that it really kind of came together was I wanted, as an airline pilot, I wanted to find direct real estate investments so I could benefit from things like depreciation and tax deductions and things like that. And what I found myself doing was actively investing in real estate, and how much pain goes into that and how much work goes into active investing in real estate. I see you smiling. But I still wanted it in my portfolio when I realized it was very difficult to find a good place to put my money, or trying to select my own investments just wasn't realistic. So what I did was I joined in a partnership with a really good friend of mine, Scott Lewis. We built Spartan to allow investors to passively invest in a really world-class operation and benefit from all the things that real estate provides us. And as an airline pilot, my podcast is really just kind of an opportunity to teach other airline pilots about all the things that I made mistakes about and all the things that we've done along the way, and introduce people to my network, right? So, who's your CPA? Like Gary, I had you on the show a couple weeks ago. Who's your cost seg provider? Who's going to do your trust and will and estate planning? And, what are some considerations you need to have? So my journey really was all about how to provide high income earning professionals an opportunity to get into real estate without having all the headache along the way. And, I didn't know a lot of this stuff 15 years ago. And so I think the podcast is a really good way to give back to the community on like, hey, this is the stuff that I didn't know, and I'm going to explain it in a way that's simple to understand. I mean, a lot of financial mumbo jumbo out there, but this is really kind of what, has helped a lot of our investors and people that I've come across. So
a lot of the things that you do on your podcast also, again, and you've talked about some of it is that, making sure you get with the right people to take care of these things, because there are so many, I'm going to say content creators, and I'm going to use that term very loosely, that are out there that are putting out bad information. And so many of them that are saying all of these things that typically are considered passive. They're trying to say, oh no, that they're active, and there's ways to write all this stuff off and so forth. Can you talk about some of the mistakes that these high earning professionals that are your audience, some of the mistakes that they've made that you're helping correct?
Yeah, I think the first and foremost, they have to get really clear in what they actually want in their life, And I think that clarity is what I lacked when I got into real estate. I thought, hey, I want to generate passive income so that I don't have to fly as much, or I don't have to be so pressured to, scrape together income or not live a certain lifestyle. And I think the result was I ended up with a bunch of real estate that I really wanted no business in operating myself.
Mhm.
And I think sometimes, people have to be very honest with themselves. Like, do you want to create your own active real estate portfolio, or do you want to be completely passive? And then I think people need to understand, am I okay with partnering with somebody that's effectively going to make all the decisions on my behalf? Or am I more in the driver's seat and I want to be making all the decisions? And so I think you have to sort of, be realistic with that. And then also realize that you're making an investment and that it has inherent risks to it. So it could depreciate in value. It could not cash flow in the way that you think. And I think investors go in thinking it's all up and to the right, and there's no way that this can fail.
Right.
And I think there's a perception problem that people can stumble into, and then kind of be really upset when it doesn't work out. So I do think people should come in with a good perspective. And then I'd say the last thing is, Gary, and I know you talk about this on your show, is taxes, right? So there's a lot of people out there that are like, oh, you can do all these deductions and do all these things from real estate. And I think as most high income earning professionals who are working for active income, who are not real estate professionals, are going to find themselves with some tax benefits from real estate investing, but not the ones necessarily that they hear about, in the headlines where they can write off other income or something like that. So I think having that perspective and those expectations set right, I think is really important. But also I would leave it with, real estate can be a very powerful thing to participate in and invest in.
So typically, most people think of investing in real estate is something I'm doing with I'm going to say my after-tax money, my money that I have in a savings account and stuff. There's other ways of doing this. Can you talk about that, and where these funds can come from?
Yeah, I would say really there's kind of five sources that I would recommend folks, consider or think about. And I talk a lot about it on my podcast, which is in no particular order. One would be you could borrow against your 401k. And I know that this is kind of a sensitive topic, but a lot of airline pilots have this massive 401k, and their airlines are going to contribute 18 to 20% no matter what they earn into their account. So, and a lot of them are maxing out the $60,000+ every year, and they're heavy in the stock market. So to get some diversification, borrowing 50k or half the balance, whatever is lower, you can use that as a diversification strategy. And the interest that you pay your plan goes back in as a contribution to your 401k and can be actually a way to sneak more money into your 401k if you've maxed it out. So I think that's a great strategy. 50k, you could invest in one of our deals or buy a single family home or whatever it might be with that money. It's a great way to get the cash. The other thing is like a leveraged stock account. You can have a great taxable dollars working hard for you, that you can borrow against, and you can keep your money in the stock market as opposed to a 401k loan, and that gives you a great vehicle to invest with. I've used a HELOC, a home equity line of credit, as a third resource to invest in real estate. Now this gets tricky because you got, there's downsides to this. You have to make sure that you can cover your payments. You don't want to get over your skis on that. But I've used that to buy multiple rental properties. I know, Gary, you live in the Washington, D.C. area. My very first rental was in Capitol Hill, D.C. I bought a rental. It appreciated in value. I took a HELOC. I bought 3 rental properties with the HELOC that came from that rental property. But I made sure that I could still make those payments, and I planned for that cash and things like that. So it's a very effective strategy. A lot of our investors use a whole life policy, life insurance policy, that then they can borrow against that, and it can be a great multiple or a great layering strategy. And then the last thing that I'll say is I think a lot of investors don't realize that they can use their IRA or their self-directed IRA to invest in real estate. So you may be thinking, hey, I used to work at a job and I no longer work at that job, and I have a new job and I left my 401k over there. You can take that and you can roll that into a self-directed IRA and invest. So those are really kind of 5 buckets that I think people maybe don't come to mind. And of course, you can always just use cash or equivalents. And so there's really a litany of ways that I've seen investors really take advantage of the tools that they have in front of us to invest.
So one thing I want to say about, you talked about the self-directed IRA, and lots of times if somebody has a broker or financial advisor that they're dealing with, they're going to tell you, no, you can't do that. And it's because your money's not in a self-directed IRA. And your typical IRA that you have, yes, there's certain things that you can invest in. Where with
Right.
self-directed, it gives you more space and more items that you can invest in.
Yeah, the best way somebody explained that to me, Gary, is everybody has a self-directed IRA, right? So anybody, it's kind of a marketing term for these custodians that allow you to invest in real estate with it. So anybody can go to their advisor and say, I want to tell you what I want to invest in. I want to self-direct. But most of these Fidelity, Schwab, T. Rowe Price, et cetera, they don't allow you to invest in real estate.
Mm-hmm.
And I'm not talking about REIT stock. That's completely different. I'm
Right.
talking about hard assets. And it's because they can't really fee you for investing in those assets, right? They can't take 1% of AUM, or they can't put their expense ratios into that real estate. So they don't really offer that. But there are custodians like IRA Club, Directed IRA, Equity Trust, just to name a few, that you can roll some of your account over in, or all of it. You don't have to do the whole thing. And then you can actually, again, self-direct your account, but now it's with a custodian that actually allows you to invest in real estate. So it's a really good strategy that people don't realize you can do. And it can be very lucrative. Yeah.
Right. So you talked, and we know you do a lot of stuff with self-storage units and things like that. I think lots of times people think that those are owned by single individuals and things like that. Can you talk about, the self-storage and kind of what how that looks on the horizon and what's going on?
Yeah, I love that question. Very loaded. Yeah, I think some people think that, all these facilities are owned by one person, or even you might drive down the road and you might see an extra space or a public storage and think, oh, that's owned by that big behemoth company. And it's kind of interesting. There's more extra space self-storages that are owned by individual owners or investors that then extra space actually owns itself. So a lot of the branding, that's just the property management that extra space is doing on behalf of that owner. So for example, I have 6 properties that are managed by extra space, and we own them with our investors. So it's not just publicly traded. So that there's that one layer. I'd say the second layer is you might drive by a property and it's a self-storage facility, and it's, Gary's self-storage, random name, right? And Gary might own a self-storage property, might be Gary's, and he's an individual owner. And we kind of refer to them as mom and pop owners. Maybe they own 1 or 2. And you can go out and get an SBA loan and get a pretty good financing term and pretty good leverage and buy your own individual property. But I'd probably say a majority of them are owned by conglomerates like Spartan, where you can actually invest in a property, a specific property. So as an example, we're buying 2 properties in Colorado right now, and an investor could say, hey, I want to invest in those 2 properties. And we'd say, okay, and you invest 50 or 100,000, and you're an owner in this multi-million-dollar self-storage property, and you're going to share in all the cash flow. So any money that's produced by the facility, you're going to share in that, and you're also going to be rewarded when we sell the property for a profit. Or if we refinance the property and take a bunch of cash out, you could be rewarded that way as well. And then, as you know, Gary, the investor is going to get a K-1, which is going to give them those tax depreciation benefits. And depending on your situation, you might be a real estate professional. You might be able to use those deductions against your active income. And if you're not, if you're just like a doc, a lawyer, pilot, something like that, and you're doing no other activity, then you can at least use that depreciation to offset any distributions you get from that investment until the time that it sells. And so, yeah, I would say, I think what's really cool is, we bought a $100 million deal last year, and there was somebody who invested as little as $50K in it.
Mm-hmm.
And so you can be a direct, kind of direct owner in the entity or the LLC that owns the real estate. And that's better potentially, or it's different than investing in a REIT, because a REIT's not going to give you the tax benefits, and you're not investing in that one particular project in a location. You're kind of investing in the whole thing, right?
Right.
It's subject to speculation and things like that. And the REITs have done very well. I'm not saying it's a bad investment, but I'm just saying it's a different investment when you invest directly in the real estate. You know that market, you know that property, or you learn about it and why it's a compelling opportunity. So really a nice industry.
So, I mean, lots of times, again, going back to, what I talked about with the content creators, and they're really trying to put out there that these tax strategies and things like that. What you're doing with the self-storage and at Spartan is you're truly doing this as an investment. You're not doing this as, hey, this is the next best tax strategy or anything. You're doing this because this is a solid investment, and you're expecting, a certain amount on return for operations, but then also, when you're looking to sell. Can you kind of talk a little bit more about that, and what Spartan looks for? And I know we've talked about this, but what you're looking for in a self-storage, and why it's important for where it's at, and what your exit strategy.
Yeah, it's a great question. And I think what's fun about self-storage is the story behind each property. So we might come buy a property that is mismanaged, and we will come in and we have a team of over 130 professionals that know self-storage. This is all they do all day long. And we'll give the property the backing of a call center. We will plug in our AI into the facility process. We put our marketing team on it. And now it's going to have all the bells and whistles that maybe it didn't have when it was owned by, Joe, who's 85 years old and, kind of on his way out to retire. And so he hasn't really been optimizing that facility in a way that's going to get the most income out of the property. And I think that's what's really neat, is that we can find these opportunities and then provide them the opportunity to an investor to participate in that specific deal and benefit from all the systems that we've put in place. And that's what I really wanted. I'm kind of doing this to provide myself 10 years ago, the passive
Right.
investment opportunity that gets the benefits of real estate without all the actual work. Some of the things that we look at in these properties is we want to know that there's more demand than supply, quite
Mhm.
frankly, right? I mean, it's how well occupied is the market, and is this property undersupplied in a way that has allowed us to raise our rents and raise our revenue and our profit? We want it well located, and we're thinking way down the road. We're thinking, hey, who is going to buy this property in 10 years? Is a big publicly traded institution going to be interested in this? Or are we going to be looking for the next mom and pop buyer, or somewhere in between? And we want to make sure we have that optionality, because we don't want to be able to just be like, okay, we're going to buy this property and here's the one plan that we have to sell it.
Yeah.
And then that plan blows up, right? So we want to make sure that the population around the property is dense enough to get interest from a big buyer. We want it to be on a road that's got 20,000 or more cars that drive by every single day. We want to make sure that all of our competitors are full, that there's good visibility from the main road. And then we want to make sure that there's something compelling about the investment itself. Can we actually raise the rents higher in that market, or or the rents kind of already as high as they're ever going to get, based on what everybody else is charging? So there's all that. And then I would say the other big major thing we do is we actually will build them. So we have our own construction company that will build these properties. So for example, we're going vertical on a facility north of Seattle in Bellingham, Washington. We found this really nice parcel in the parking lot of Costco, like literally adjacent to
Yeah.
the park. So, I mean, they've already done all the work. They know where to put Costco's, and it's where all the new developments are coming in. And so we said, we want to build right there. So we called up the owner. We took that property through permitting for 2 years with our team, got all the building permits. And about 3 years after spending a bunch of money and getting that property ready for investment, then we bring in the investors and say, hey, you want to participate in this fully approved, fully entitled project that's in a really great location. So I would say that's the other part. So sometimes we're buying these existing facilities that have some just small tweaks to make that come with great cash flow. And then sometimes we're building from the ground up. So it might take a couple of years for cash flow, but then there's a lot of value appreciation from building from the ground up.
Yeah. I mean, I think
Yeah.
one of the things I've heard you say before is that self-storage is great in good times and in bad times because people, if they need to downsize, they're putting their stuff somewhere. If they're growing or moving, they need to put their stuff somewhere. So I think that's something to to keep a look at, that the demand is there.
100%. Yeah. It's actually kind of a boring time when the economy is not growing or shrinking. It's kind of can be kind of just a little bit up. But people always have a need for storage. And I think the biggest misconception people have is they think, oh, well, it's just because Americans have too much stuff. And they're probably right. We do have a lot of stuff. There's funny TV shows about the people's inability to give away their belongings, like tidying up with Marie Kondo, right? But people have life events, and that's about 70% of our customers that come to our stores. They're saying, hey, I'm going through a divorce. I'm having kids. I have a renovation going on in my house. I'm moving. I'm downsizing. I need this self-storage unit because my mom just passed away. I've got to move her stuff out of the house. And we've all had these stories, right? We probably, your listeners have used a self-storage unit. One in every 3 Americans has, actually, at some point in their life. And then we get a ton. The other 30% of our customers are businesses. There are people saying, hey, I remember the first facility I ever built, there was 10 units, and they all got rented the first day we opened by one company that said, hey, I have a furniture staging company. I have different trucks and different vendors. They're going in and out of these different homes. I never know when I'm going to need something, so I'm renting all your first 10 units that are drive up right outside of your gate so I can have easy in, easy out access. We have sheet metal contractors, general contractors. We have folks that have Amazon, Etsy businesses, landscaping businesses, all types of different companies that say, hey, I can't even put my utility truck in my driveway because my HOA doesn't allow it. So I need a self-storage unit. So every day I've got to drive to my self-storage unit, swap out my truck, and then put it back at night so I can actually have a business. So there's just so many things that people are using it for. And I think that's why you see that kind of growing demand.
Yeah. If you got to go back 10, 15 years ago, let's say, and you know what you know now, what advice would you give yourself?
Yeah, I would say, keep doing what you're doing because, it's all going to work out. But I would say, if you're, I think high income earners tend to focus on their gross salary,
Mm-hmm.
right? And say, hey, I'm making 500,000 or 400,000 a year, but they're really not focused on what they actually keep. And, Gary, you probably see this a lot where people think, I'm making good money, but where does it all go? Right. And the airline industry has really changed in the last 5 to 10 years with pay increases and pilots making more money. And I think a lot of them, start to look at their tax return and say, geez, I paid the government more money this year
Yeah.
than I made a couple of years ago. And, what do I got to do to position myself? And I think learning those different strategies and what you can do and partnering with good CPAs and good accounting firms can help sort of ground you in reality and what you need to do in order to kind of change your tax situation. And there's a number of things you can do. And sometimes you may say, you know what, that road less traveled that I have to go down to do that is not a good one. But I would say at least explore it, really understand how you're treated and in terms of tax and some of the things that you can do to sort of reduce your taxable exposure, I think is really worth going down. So that would be my advice. I would say that, having a good diversified portfolio is also really good. I think, putting all your money into the stock market is, in my just shared experience, not a great idea. Pulling all your money out of the stock market also a terrible idea, right? I think we get into this like, you know, oh, I gotta, I want to go all into real estate. It's like, that's not a great idea, because real estate is cyclical as well. And so I would be really grounded in just making sure that people diversified, get some real estate in your portfolio, get some stocks, bonds, mutual funds in your portfolio, and really have a good mix of that. And don't be afraid to ask for help. I think financial advisors get a really bad rap, and because they charge money and things like that. So find one that adds value to you. And I found that the ones that add the most value, I tend to understand the most. Like if they're talking and I'm not understanding what they're saying, I really don't like the attitude of, well, I don't understand what you're saying, but you're the smart guy and this is what you get paid to do and you just go do it. I kind of like the ones that kind of really make me feel like I know what they're doing and they almost make me feel smarter about it.
Right.
And those are the ones that I really like to spend time with. So and those, and financial advisors or wealth managers or RIAs, they exist out there. There are ones out there that will give you that feeling. So, keep looking and keep trying to find the right person, the right guidance to do that.
Yeah, I think that all the time when I preach this about, having your professional team and stuff like that, and if your team is not talking with you in a way that you understand, then you need to find a new team, because
Yeah.
there are CPAs and financial advisors, wealth advisors, attorneys, and so forth that will talk your language. So don't be afraid to either ask or find someone that will do that. Um, Ryan, if people want to learn more about Spartan, they want to learn more about investing in the self-storage units, how can they, where can they find you? How can they find more information on Spartan?
Yeah, you can email me, Ryan at Spartan-investors.com. You can also go to our website. We have a great website, kind of walks you through a lot of things, a lot of good education out there. And the website's Spartan-investors.com. And you can, fill out an intake form if you want to get on our self-storage newsletter or get investment opportunities. There's a link there that you can fill out your name and somebody will get in touch with you. Yeah.
Talk about podcast.
Podcast. Yeah, the podcast is great. It's Passive Income Pilots, and you can find us on all your favorite places: iTunes, Stitcher, YouTube, Google search, Buzzsprout, all the things. Passive Income Pilots. It's myself and Tate Duryea. We put on a show every Tuesday. And so if you go back to episode, I think 142, Gary, you're on it.
Yep.
So
Yep.
you want to learn more about Gary, you can listen to his podcast or you can listen to ours as well. So
Great.
yeah.
Hey, Ryan, really appreciate your time today. I liked our conversation. I think it's something important for people to look at because, again, passive income, it's money. You're making money while you sleep. And I think that that's an important thing for us to do, instead of just working always hard for everything.
Absolutely. Thanks for having me,
Appreciate your
Gary.
time. Yeah, definitely.
Yeah.
Hey, this week our guest was Ryan Gibson, and he's the President and Chief Investment Officer of Spartan Investment Group. And I will see you guys next week.